Hello and welcome to Just Africa, the program that delves into the forces shaping our continent's future. Now, for too long, the narrative around African investment has been one of challenges and untapped potential. But today, the story is shifting. Headlines are buzzing with news of investment comeback, with foreign direct investment and portfolio capital flows showing promising signs of growth. Is this a genuine turning point? Are we finally seeing the continent emerge as a prime destination for global capital? What's driving this renewed interest? And more importantly, is this investment benefiting everyday African? Live from Lagos, Nigeria, I am Olumide Shokoya. I have gentlemen and ladies. Starting from my left, Omivie Dolo.
Tell me you started because they say ladies first.
You can
But
say
it's
that
actually
again.
ladies first after men. Good afternoon to you, Lagos. Good afternoon, Nigeria and Africa as a whole. I want to say welcome to Just Africa. Olumide, just like you said, after the pandemic or during the pandemic, the Africa economy actually dipped down. But after that, in 2023, some beautiful stories began to spring up, and the stories started changing from just being the Africa that is going down.
Hold your thought. Hold your thought there before we dive right into it. Of course, you can't introduce a lady without introducing a gentleman. I always call him the perfect gentleman. Onyipriye Krumale, how you doing?
I'm okay. Hello, Lumide. Hello, Movie. It's good to
Hi,
have
Ray.
you. Hello.
All right,
It's
so
good to have you here.
Yes, let's have your thoughts.
Okay, yes, I was saying that, in 2025, the Africa economy generally, not just Nigeria leading, were able to come back from the deepening, the sinking that they were finding themselves into as a result of the pandemic, and they were able to come back alive, which is a good sign that the Africa economy is going to do well. But just like one of the questions you asked,
Yes.
is this sustainable? Is this going to be a short term, or is going to be something that Africa has been looking out for, that is going to level us up with the other parts of the world? Maybe our guests will help us find out today. I don't know.
All right, so Priya, coming to you now. This morning on Soup Business Landscape, we took a similar story: foreign direct investment dipping as declining as high as 70%, and it's attributed to the fact that most FDI now are going for short-term investments, government bonds, treasury bills, and all that. Instead of investing directly into the economy.
Most of the investors are shying away from long-term investment because of the market volatility. And they seem to be, even though Africa seems to present the front now where it has presented itself as the potential investment destination. But there are other things. Currently now, most African countries are going through reforms. And most of the economic reforms, a case in point in Nigeria, has not been really taking deep yields. It's not been having all the yields yet. One of the pictures that was painted by Olayemi Cardoso, who is the chairman or the governor of the Central Bank of Nigeria, that's even the reason why the decision reflected on the MPC meeting in the first time, the second time, and the third time, 3 consecutive times, because he didn't want to change the trajectory. He felt that the recent economic reforms are yielding little profit, and that if they change the NPR currently from 27.5% to about 20%, it might distort the yields. However, investors are looking at that, because if you look at the Securities and Exchange Commission, there's also reforms going in there, where we have the introduction of digital assets, and we are tending toward crypto, where Nigeria is going to become a full-blown body. So those who have actually exited the market before 2023, just the way Omivie said, might be considering another option or decision to come back into the system. The Tinubu administration did some form of reforms. And when we look at that reforms, you can look at the banking sector, 500 billion naira market bank capitalization. We've seen a few banks taking hold that have actually met the threshold.
Yes.
And a lot of them have not actually met that, and though they deferred, because we still have up till 2026 before we see that. So they are equally working towards that. And do remember that one of the drivers of the Nigerian economy is the Nigerian banking industry, the banking system. So, and these banks they have partnership abroad too. You can see about GT Co that is currently now listed in the London Stock Exchange. So the investors, foreign investors, are weighing their options and looking at all this volatility in the market, whether to make or not to make their decisions at the moment. So currently they are still watching. However, when you look at the portfolio capital, which is the short-term investment, they consider that specific aspect of the market like where they can put in their money and they won't have to wait for long. Waiting for long means that the volatility that is in the market could distort their chances. So that's where they can put in their money and get it back at the return within the shortest period of time. That could be one of the reasons why the FDI seem to be declining, but I don't really think it's declining.
Yes.
I think the market investors are just taking a very, very good look and watching from afar.
I think one of our loyal friends are that of the ones in Asia, I mean China, and of course Japan now is also looking into Africa and Nigeria. So yes, we should see a whole lot. And if China and Japan are coming, other countries, I'm sure Russia too will definitely step in. We have other people coming in. And yes. So today we are exploring a powerful shift in Africa's investment. Yes, today we come back after years of mixed investor sentiment. We are now seeing foreign direct investment inch upwards and portfolio capital, just like Priya said, flowing back into the African market. But is this just a post-pandemic rebound or the start of a lasting transformation? We'll find out after the short break. Stay tuned, it's Just Africa. Welcome back to Just Africa, where we go beyond the headlines to unpack the forces shaping the continent's business development and economic future. Now, today we will look at Africa's investment comeback, foreign direct investment and portfolio capital rising. To unpack this crucial topic, we are privileged to have with us today a leading voice in African finance and investment. He is a public policy expert, business strategist, corporate strategist, vice president finance, independent director, business transformation and project management advisor. Our guest today is Oluwatosin Oladiton. Welcome to Just Africa.
Thank you very much. Good afternoon.
All right, so let's ask the big question. What is really driving this investment comeback? Is Africa's economic fundamentals improving, or are global investors simply looking for new opportunities?
Okay, so everyone is trying to look for a higher return. Currently, if I'm going to invest in the developed market, I'm going to be getting a return of, let's say, 5%, 6%. But if I'm going to invest in the Nigerian market, even recently we've seen that there's a lot of injection. The CBN recently raised about 2.03 trillion naira in the Omo bills and the treasury bills. And they also adjusted the rate upward to be able to capture more people within that space. So if I'm going to earn 5%, 6% in one country, and I'm going to earn 23% in another country, provided the exchange rate does not devalue further than that, then everybody is going to take a bet on that and want to move their funds to where it is safer for them to earn more return. And I'm a bit worried as regards the split of the capital importation we have in Nigeria. About 75% is in money market instruments, about 4% is in equity instruments, about 6% is in loans, about 16% is in bonds. Even though we see that it has improved 67% year on year, because the reason is simply driven by last year, the exchange rate was more volatile. In the first quarter of last year, it was within the space of 1,200, but by half year or third quarter of last year, it moved to 1,600. So if I've earned a return of, let's say, 23% and a devaluation of another 20 to 30%, which means I'm in a worse position than the way I was before I brought in that investment. So what is really driving this is majorly stability in the FX and the ability to earn a higher return. So when we look at it quarter on quarter, we've seen that it's only moved by 10.9%, which simply means that that quantum leap that we're seeing there is not really sustainable over the long run. And another concern, which is also a very big worry, is that this money is not going to the right sector. We're seeing that about 55.44% of the funds that came in last in the first Q1 2025 is going to banking. Another 37.18% is going to financing. So we see that the fintechs and the banking industry, although we are aware about the fact that March 2026, the banking sectors have given a deadline for a 2-year recapitalization journey, which was initiated sometime in 2024. Where the core drivers of the economy, we're seeing production and manufacturing only 2.3% of the total capital that came in is going to that sector, and only about 0.43% is going to agriculture. That shows that there are some very tough questions to ask, that this money are not coming to the places that is going to drive sustainable development or that is going to drive investment in the long term, or that are going to contribute to the capital of the developing economy, or they are going to make it easier for Nigeria to be able to achieve the $1 trillion economy by 2030. And where is the money coming majorly from? We've seen that about 65.26%, which is like about 3,861.96 million, is coming from the United Kingdom. And we could also see the another leader in Africa, which is South Africa, is contributing like about 501.29 million. So we could see that these people are trying to live, so we can try to see, look at what exactly is happening in the UK market and what exactly is happening in the South African market, and why are they trying to move their portfolios, and why are they trying to move their investments down to Nigeria. Another thing to be very, very worried about is that unlike what used to happen before, where Lagos used to be the hub of investment, where we have a lot of capital coming into the Lagos horizon, this time around Abuja took a flip, and Abuja is accounted for about 54.11% of the total investment that came in, while Lagos accounted for 45.54% of the total investment that came in. So just two states in Nigeria is accounting for about 99.65%. That is another very tough question, another point of worry. Are we saying out of the whole 36 states and the federal capital, the only attractive place for people to invest in Nigeria is in Lagos and in Abuja? It simply means that it is. And if you look at these two states, yes, we understand that Lagos is the commercial hub of Nigeria, but Lagos is not the major part where we have majority of the industries that are going to drive sustainable development, or that is going to drive economic development in the long term. Also, we can also see that the investors are playing very, very safe. We've seen that Standard Chartered is accounting for 37.29%, is the foreign denominated bank, headquartered somewhere in South Africa. Stanbic IBTC is accounting for 24.78% of the total investment that came in, is also headquartered in South Africa. Citibank, 18.66%, is also not headquartered in Nigeria. Citibank has correspondence banking all over the world. Is not majorly an indigenous Nigerian bank. Rand Machad Bank is accounting for about 6.86% of the total investment that came in within the Q1 2025. Is also headquartered in South Africa. So we already know why, the reason why South Africa is accounting for like about 8.88% of the total money that came within that space. The only bank that was able to raise its head above the 5% threshold is Access Bank PLC, and Access Bank PLC accounted for about 6.69%. Now, these five banks that I've mentioned accounted for about 94.28% of the total capital that came in. So we need to ask the right questions. Yes, we've seen a sporadic increase in the level of capital importation in Nigeria as a result of the FX stability. But we've also seen that this capital that is coming is just because Nigeria is providing much more returns, and an average investor is not. We are not investing in the right product, we're not investing in the right market, and we're also not investing in what is going to allow the company or the allow the companies in Nigeria to be able to develop. We are not investing in the right market that is going to allow the economy of Nigeria to develop over the long period of time. People are just looking for a safe bet for them to be able to keep their money and earn a higher return, then take it back to their country. In finance, we call that hot money. So it's not like it's going to stay for. It's just like when you cook indomie, you want to eat it when it is hot. As soon as it is cold, it's no longer enjoyable for you to eat that particular noodles. Even if you want it, you're not going to get that fresh taste as it used to be. So as soon as they are able to get the particular returns that is quite attractive to them, they take it back to their country, and that is one of the issues we might have. We might see that a lot of funds is coming in, but these funds are not going to what is going to develop the economy over the long run. So, as a result of this capital importation and also the monetary stance of the CBN, we are still likely to see the monetary policy rate still being balanced at around 27.25 because the price of crude oil is dropping significantly. The price of crude oil per barrel is around 66, which is less than the average of $66, 65, $66 range, which is less than the projected for the 2025 Budget Appropriation Act. So we also need to question and if there is going to be this stability in the price of crude oil within below the budgeted mark, how will the presidency or how will the
Tosin. Okay, thank you. Thank you so much. I'm so sorry for butting in here. But let me call your attention to something very specific. When we talk about renewable energy, most of the countries are diversifying. You come to Morocco, Morocco seems to be having a large scale of investment in renewable energy. When we talk about energy still in Nigeria, we seem to be giving priority to gas. Zimbabwe, Namibia are also giving priority to mining. But South Africa that you mentioned seem to be only giving priority to one thing, which is gold at the moment, and mining activities that actually takes place in that country. So why does it seem with the Nigerian gas transit plan that is on board looking at 2060, why don't you think, why are we not attracting FDI in that industry, knowing fully well that we have abundance of gas, if not number one in the whole world?
Okay, so it might be shocking to note that oil and gas attracted 0% for this year. And if oil and gas accounted of the capital importation that came into Nigeria for Q1 2025, oil and gas accounted for 0%, right? So that simply means that and Nigeria has not really explored all its natural gas. In fact, Nigeria has much natural gas in store awaiting to be explored than the Nigerian petroleum, which which has been the pride of Nigeria. So it simply means that there is a lot of things right. There's a lot of things that is not sitting well. The ease of doing business in Nigeria really needs to be questioned. The attractive hub for you to be able to start up a business, scale up a business, and continue to maintain the business for you to be successful seems to be questioned. We also see recently that the Minister of Trade and Investment was trying to provide a response on why the US has provided an increase in tariffs or an adjustment to the tariffs that was being hiked to the Nigerian market. So it simply means that as an investor, I will only want to go to where is safe for me. How long is it going to take you for you to set up an industrial hub in Nigeria for you to be able to scale up your business? What are the political reforms? What are the conditions for you to be able to source capital? What are the conditions for you to be able to get natural resources? Even the largest petrochemical industry we have in Nigeria, which is Dangote operating a 650,000 capacity plant, the CEO of the petrochemical is not even an indigenous Nigerian. So it seems that we have a lot of things that we really need to reprioritize. One thing that I must commend this administration for is that they are driving the right investment in education. They are also, we see it as a result of the NEO Fund project, which is trying to ensure that students have access to affordable credit for them to be able to attract the best minds. So if we don't have the right our schools or our institutions do not prepare people enough to even lead those companies that are going to transform Nigeria. And investors are only going to invest in what exactly is going to give them better returns. So if oil and gas is 0% attractive drafted 0% investment in Nigeria for Q1 2025. It simply means the investors are taking the right decision, that they don't believe that there's opportunities in that space for us in Nigeria. Despite the fact that we know that we have a lot of capital resources, we have a lot of these things that have been unmined, and we have a lot of issues within that particular space, which is a huge opportunity for us to explore. So those are some questions that we really need to keep on asking ourselves. Is it likely to change over the long period of time? Yes, as the economy becomes more balanced and there's a lot of confidence in the economy, and we're seeing a lot of monetary policy adjustments, which the central bank governor, Madayemi Cardoso, is trying to foster. But like I've always, that has been in the last 2 years, we're having more fiscal issues as regards balancing of expenditures and income, as well as the share of the debt to the total expenditure in the Nigerian budget, which is not likely to make it seem for an attractive person that want to invest to come into the Nigerian space over the next couple of years, pending when we are seeing a bit of adjustment.
All right, thank you very much. You have said a couple of times that Africa generally, the capital investment is not going into the right sector. So you believe that both gas and every other sector, apart from the bank and the fintech, who they are the ones that are actually taking the chunk part of the capital investment. So from your own opinion, or in your own opinion, what do you think should be the right sector for this capital investment?
No, Nigeria, if you look at majority of the economies in Africa, majority of African economies are developing economies. So certain things that is going to contribute, you have to invest in industries, right? You have to invest in the core manufacturing and production. And you also need, Nigeria has a large population of about 220 million, likely to grow to about 400 million in 2050, 2060. So another thing that currently we see that Nigerians are importing more sugar because the local processing of sugar is not even able to meet up with the local demand. So we have to invest so much in agriculture. We also have to invest so much in industries. Majority of these services are not even majority of their infrastructural spend on those services, banking and finance. We don't have they are not really owned by Nigerian companies. When I mean that they are not really owned, the infrastructure that they work on, the database or the server where they used to carry out majority of their transactions are not indigenous to Nigeria. So at the end of the day, we are just getting this money and we are still paying it back, right? So recently, we've seen that an indigenous Nigerian telecommunication company, although it also has a lot of foreign investment, I just recently changed its name from Etisalat to like about T2. So the right thing is, does the nation want to develop? Yes. Does Nigeria really need to capitalize on the core critical factors for them to be able to become a developed nation? Yes. We currently have like about 57% as the share of services contribution to GDP. There is no nation that is developing and we have more of services that are not localized services contribute to the developing nation. Of course, it's not going to happen anywhere. It has never happened before. It's not going to happen again. Whereby services is going to drive long-term development. For Nigeria to be able to achieve a double-digit growth in GDP, we need to invest appropriately in agriculture. We need to invest appropriately in our industries. If our industries are able to thrive, then I think we should be able to get a desirable returns for people to be able to achieve that development in a very shorter period of time than the longer period of time. But are we on the right direction? Yes, we will need to take a bit of policy reforms which are currently going. I must commend the current administration for the tax reforms. I must also commend the current administration for the recent Nigerian the Insurance Act, which brings or consolidates several insurance silos, several policies on insurance that are in different silos. But for us to really drive this development, the government and also the capital market, both the capitalists and the socialists, must be ready to contribute significantly to the core drivers of a nation's economy, which is education, technology, agriculture, and industry, rather than services.
All right, thank you very much, Oluwatosin Oladeton. We can talk about where this investment should go, but the fundamental question now is that given that this portfolio capital can leave quickly, what do you think needs to change to make this inflow sustainable and stable?
Okay, so rather than making the portfolio or the money market instruments sustainable and stable, I would rather advocate for the equity instrument or the long-term loans or the long-term bonds to be much more in the private sector, right? To be much more sustainable and stable. And for you to do that, you need to first there need to be a very strong confidence in the naira, in which I must commend the CBN. Over the last 6 months, over the last 8 months, the naira has really been relatively stable. Although we have several interjections, we have several interplay by the CBN injecting funds to be able to maintain the stability, but it has been within the range of 1,535, which is closed last year, December 1st last year, 153, 1536, 1535 within that corridor, and we have also maintained that stability. Even when we saw that it was a bit going towards the downside. It was just within the corridor of 1,600. So first, but is that the true value of the naira? No, the naira is significantly undervalued. Naira should be trading somewhere within the corridors of 1,000, 1,200, depending on based on the prices of similar goods and commodities across different industries. But like I've said before, if the portfolio market or the money market instrument is not a safe place, although it's going to see that a lot of funds, a lot of confidence in the market because people believe that the market should be able to get their particular returns. And what the government can do will try as much as possible to ensure that the naira is stable. If the naira is stable and I'm getting a return at 23% on the naira instrument or 24% on the naira instrument, I'd rather forfeit investing at the 6% and come and invest at the 23% and take it back in 1 year time, right? That is not going to drive the economy, or that's not going to drive sustainability of the economy over the long run. We rather want that capital investment in equity on the core drivers of the economy, not just equity, but in the core developing sectors of the economy should invest, should have more share of these portfolio investments than the money market instrument. So it is good. We see a lot of capital coming in. We see like an increase of 10.9%. From quarter on quarter, although despite the fact that Q1 used to have lesser investment than Q4. So most times we usually see more investment coming within Q3, Q4 when the share of it so, which means that we're likely to see more investment. But it's going to be a worry or a very big concern if most of this money is going to come to portfolio instruments, which means that we still need to have a lot of work to do for us to be able to make Nigeria an attractive hub to invest capital in things that are going to drive long-term development for the Nigerian economy.
All right, thank you very much, Oluwatosin Oladiton. I'm loving where this discussion is going. But let's quickly go on a short break, and when we come back, we'll continue with the program. Stay tuned.
Welcome to Femi Walsh Limited, owners of Soup TV Lagos, Our Radio Lagos, Kaswa Radio Kano, and of course Emirates TV Abuja and Dubai. Our niche market for media is business, economy, and development. At Femi Walsh, we promote your company's products and services using our world-class facilities. From Our Radio to Sook TV, what you get is nothing but the best of the very best.
And if you're looking for the premium production firm for your events and corporate coverage, think no further, because we offer you the best of industry standards.
With high-definition cameras ranging from 4K to 8K multicam setups, high-directional microphones, and real-time streaming encoders, we give you a production like none other. And if you're looking to produce podcasts, adverts, and documentaries, our team of experts will ensure that you convey your message clearly and professionally. Femi Walsh, Global Vision, Local Impact. On the 19th of August 2025, Paris will come alive with the prestigious People's Choice Governors Awards taking place at the Gauche Hotel, Paris. The prestigious People's Choice Governors Awards is designed to celebrate governors who have contributed immensely to their states in different countries across the world. If you are a governor who's gone above and beyond to deliver transformative projects in your state and country, then this award is for you. To partake of the Governor's Excellence Awards this year taking place in Paris, all you have to do is send an email to supnexus.com with the words, "I accept," and we will get right back to you. You can also send a WhatsApp message to the WhatsApp number scrolling on your screen right now. You don't want to miss Paris for anything, and we are looking forward to celebrating you and your achievements this year. So contact Soup Nexus to make that happen.
Welcome to the Africa Development Studies Center, ADSC. ADSC is an organization focused on training and research to advance sustainable development and growth in Africa. We exist to facilitate customized training, research, and study exchanges worldwide on leadership, management, and critical development issues. The center offers a platform for the exchange of ideas and best practices. Our comprehensive services encompass research, consultancy, capacity building, training, and education programs, as well as publishing and disseminating development-related knowledge. Our faculty consists of experts and researchers with extensive experience in policy formulation, implementation techniques, and monitoring and evaluation. Our methodology involves talks, individual and group exercises, games, video screenings, and discussion seminar sessions in a cozy atmosphere, making learning enjoyable for our participants. For more information, email us at info@adstudiecenter.com or call +234 912 039 2362. Visit our website at www.adstudycenter.com to learn more about our programs and upcoming events. Africa Development Studies Center, rethinking development for Africa.
Welcome back to Just Africa. We're still looking at Africa's investment comeback with focus on foreign direct investment and portfolio capital rise. And we still have Oluwatosin Oladiton. He is a policy expert and business strategist. So glad to have you.
Thank you very much.
Okay, thank you very much. Many thanks for joining us in the program, Oluwatosin. Now, if you look at it very well, between the year 2020, 2023 to 2024, 2025, many multinational companies, multinational corporations, multinational enterprises left Africa, most especially Nigeria. Sanofi left, PZ Cushing's Limited equally left, GlaxoSmithKline equally left, Diageo PLC equally left. And some of the excuses they gave was that the cost of doing business is quite high. There is a scarcity of foreign exchange, and they gave so many myriad reasons and challenges. Do you really think that the continent of Africa and Nigeria especially, do you think we have really established a comeback as FDI, as far as FDI is concerned?
Okay, so I would rather say we don't have FDI yet, because we have FPI, foreign portfolio investment. So we have a higher share. If 75% is going for portfolio investment and less than 10% is going for foreign direct investment, that is in equity and other capital, then we don't have FDI, we just have FPIs, right? So it's still expensive to do business in Nigeria, right? The cost of manufacturing, the reason why we're importing more sugar, the reason why we're importing more foodstuff, especially in Nigeria, as at this point in time, compared, despite the cost, the high cost of freight, despite the high cost of tariffs, despite the high cost of importation, And despite the fact that the government is doing everything possible to drive a Nigeria first policy. The reason why we are still having a higher share of import for our goods is simply because we've not been able to produce enough to meet up the demand. And something about Nigeria that we need to be very for us to take into consideration is that we're a 230 million population economy, and this population is going to increase at a minimum of 2.6% every year, which means that if we continue at this rate in the next 20 to 25 years, we are going to double our economy. Now, if we are going to double our economy and currently we don't have enough to be able to satisfy the physiological needs of the existing economy, and we're still going to double our economy, then we really need to sit down back and reprioritize on the best approach for us to take. The cost of doing business in Nigeria is still a bit very, very high. The cost of financing in Nigeria at 27.25% is still relatively high because it simply means within a space of 3 years, I'm paying back 100% of the capital that I took from the bank. No company is able to be able to suffice that. Although we see the large manufacturing companies in Nigeria and also the services companies in Nigeria being able to come back to profitability as a result of the stability in the naira. So MTN that was previously declaring a loss came back to profitability, majorly driven by an FX. Dangote that was previously declaring a loss. Some firms in Dangote's group holdings, Boa Holdings too that was also declaring a loss was also able to come back to profitability. So we are likely seeing the stability. The stability is one thing, right, which we should I must commend the central bank governor of Nigeria for putting a lot of reforms, putting a lot of policies and structures in place for us to be able to drive that stability in the FX. But Nigeria is not still attractive enough for you to be able to do business and make significant margins. Yes, we've seen that a lot of companies are making profit. Yes, we must commend the fact that some public listed companies are making profit, and we also commend the fact that MTN has got to about 10 trillion naira valuation on the stock exchange, which is quite laudable. But an average person in Nigeria to start up a business and be able to scale this business and transform it into profitability within a short period of time, it's really a hard call. So it simply means that the private sector has its role to play. The government also has its role to play, right? Which means that both must come together to see how best to position Nigeria, not just to attract portfolios, but to actually attract foreign direct investment, and also ensure that these direct investments come to stay over the long run. Rather, so for example, we see that the federal government is prioritizing projects on building a coastal road when rather than, I would have said, we should have prioritized investing in electricity. Currently, the cost of electricity in Nigeria is, although it's cheaper compared to other nations or other developed economies, but it's still a lot of these people do not rely on the national grid for them to be able to generate their electricity. We have a lot of independent power plants that are used by these manufacturing companies, which could offer a higher cost of electricity, and also the cost of diesel and the cost of even fueling generators is also quite reasonably expensive. So if Nigeria want to get one or two things right, I would rather say let's invest in infrastructure, which I must commend the federal government which they are doing, right? Although we've seen that although it's important to note that the coastal road and the development of the Murtala Mohammed International Airport are not from the budget allocation, which also seems poses another question. If these budget are not from these developments are not from the budget allocation, where exactly is this money coming from? If the National Assembly does not have a say over the monitoring of this particular money that is going to be spent on major federal government infrastructures. So we really need to prioritize, and we really need the fiscal policy, the fiscal side of the government, the federal government, the state government, and the local government to really sit back and see how well they can make other cities attract capital. How many manufacturing firms do we have in Abuja? How many industrial firms do we have in Abuja? Why should Abuja be attracting 54.55% of the total capital that was imported into Nigeria? Which means that it is not going to the right place. People are just trying to take advantage of, take opportunities of the higher returns that they are able to get on the Nigerian naira. And as soon as that is obtained, they take the money out, and Nigeria is still back to ground zero. So it's better for those return money not to have even come on the first place than for them to go into the wrong place, from my own point of view.
All right, thank you so much for the insight. Apart from currency volatility that is crushing the Nigerian market right now, we also have, since we're talking about Africa, we are also looking at other challenges that are scaring away investors from coming to Africa. We can talk about the coup in Sahel, the crisis in Ghana, the debt crisis in Ghana and Zambia, and we can go on and mention so many other countries in Africa that are having similar challenges. Now, this geopolitical crisis, as geopolitical risk, has carried away investors, and these investors are going to other continents to make their investment. Which of these countries do you think, or which of these economies do you think are doing better than the African economy that Africans can actually copy from or put their economy in place to attract those people back to Africa?
Okay, so different economic regimes are operate with different nations. So I wouldn't advise to go and copy from any nation, or I wouldn't advise to go and carry a particular model from any nation. Because one thing when you're looking at economy, you must look at there are two sides. There's a macro economy, there's a micro economy, right? We must also look at the monetary. We look at the major policies that drive economy too. We must look at the monetary policy. We look at the fiscal policy. Now, Ghana has been able to overcome the issues of its debt restructuring, which he had a technical default sometime in 2022, 2023. Recently, inflation has stepped down in Ghana from like about 54% to the range of 10-12% over a space of 2-3 years. Nigeria, despite the rebasing, we are still somewhere around the 22.22% corridor. So it simply means that should Nigeria go and replicate what exactly Ghana is doing? No, because there are different factors, there are different structural, even within the silos of the West African community, the Sahel community that we might likely see. We have the alliance of the Sahel states, which we're looking at Burkina Faso, Mali, which have decided that say that they don't want to be part of ECOWAS again, that they want to be able to trade independently as a regional bloc. Another serious issue that we might look at Nigeria, for example, is the state of insecurity, right? So we've seen there've been a lot of commitment, we've seen a lot of allocations to the Ministry of Defense to be able to address these issues, but it's still a very tough question to ask that, well, how long will these insecurity issues is going to be? Let's look at the global crisis that would have emerged, the Iran-Israel war. Within a space of 12 days, it has already been addressed, and we're looking at that. So we could see then too also when we're looking at the Israel-Gaza crisis, the Russia and Ukraine war. So it's not that each of these countries do not have one or two issues. We're still seeing that the Nigeria is trying to form an alliance with the BRICS, that is the which are also trying to be able to develop themselves as an economic bloc to be able to compete and reduce the demand for the naira, for the dollar. So what we really need to do is we need to sit down and look at what exactly works for us. But if I'm going to recommend that one or two other countries that we should look at, we could look at based on population, we can look at the way India is currently developing. Based on economic issues, addressing inflation, closely we can look at Ghana. Internationally, we can look at Brazil. But we really need to sit down and see how to position Nigerian economy to attract investments that are going to impact on the long term rather than portfolio investment for people to be able to keep their money safe, and after that they take their money out of Nigeria. Of course, the Nigerians investment is much more easier for you to be able to bring funds into Nigeria. Recently, the majority of the international banks or the major banks in Nigeria, the FUGAs, have been able to allow an international transaction. That is, I can purchase dollar denominated instruments, or I can transact in foreign currency with my MasterCard, with my Naira MasterCard or my Naira VAV card, which means that we are seeing it ease, right? But will we say that is it the wrong thing to devalue or to allow the free fall of the Naira from like about 700 to like about 1,500 565. Is it possible for the central bank to also continually inject and bring it to 500? Yes, but it's not going to be a safety for the central bank government to do. We were recently seeing that this is one of the periods where we are seeing our reserves getting to an all-time high. We're also seeing that there's increased confidence in the Nigerian credit rating has been adjusted downward, which means that there's a lot of improvement. And we can say that the Nigerian's economy is in a better state than it was in the last 2 years when when the 16th president of Nigeria assumed office as the commander-in-chief of the Federal Republic of Nigeria. So we can say that we are in a better situation and we are experiencing more of stability than volatility. If this stability continues and we are able to see more appreciation, a lot of people are going to take another decision to be able to come back to Nigeria. But people are not just going to come back simply because there's a stability of Naira. People are also not going to come back simply because there's an appreciation of Naira. People will look at other factors before they need to do business. And one of the things that the president is currently doing is for him to travel around the world to be able to attract investors to bring in their funds, bring in their wealth, bring in their expertise into Nigeria. And one thing we must also do is to position Nigerians, indigenous people, to be able to establish businesses that is going to grow. Why should I have a company that is going to generate significantly or contribute significantly to the nation development being led by a foreigner? Why would I need to bring in expatriate to come and lead in Nigerian indigenous companies? Of course, you have a strong business because you want an expert that has the experience and expert in that field and is also able to generate appropriate returns on investment for those particular companies. But we also need to also invest in our infrastructure, invest in technology. We also need to invest in education to ensure that the Nigerian graduates are readily prepared to be able to take up the jobs or to be able to take up positions that is going to advance economic development in Nigeria rather than just having people leave schools without being readily prepared to be able to take on these jobs that are awaiting them in the Nigerian market.
All right, Oluwatosin Oladito, I have two questions in one. You've mostly talked about positioning ourselves to attract more investment. So my first question now is, I'm looking at the macro MSMEs and of course the MSMEs. I'm not looking at the big guns. How can they position themselves to attract foreign direct investment? Secondly, yes, Nigeria right now, we are operating 30% processing of our raw materials, but largely we consume more than what we export. So how can we also attract foreign direct investors to come into the country? Maybe have a policy that would mandate them to build factories in Nigeria, 50% of their workforce Nigerians. Where do you see us going from there?
So for MSMEs, I think it is much more interesting for MSMEs. MSMEs now can connect to the global climate, and if you have a very notable idea, you have a value proposition you can present, you should be able to get into the room and have a say with several investors. And if the investors love your idea, you could position. Once you have a very good position paper, you should be able to attract investment. As at 2019, nobody knows of Money Point, although that is a financial services service provider. It started somewhere, and now currently it has grown significantly to become a reputable force in the Nigerian market. So you just an MSME that or a winning person that has an idea, develop it, present it, talk to the right partners, talk to the right investors. There is a lot of opportunities. Nigeria has a very huge market. There's a lot of opportunities in Nigeria that once you're able to get the right things right, you're able to scale. Nigerian's market is able to consume. Nigerians even have this appetite of consuming. An average Nigerian will consume first before even saving, right? We don't, Nigerians would rather go and, Nigeria, that's why the fact we say that the economic issues or the economic crisis, I still go out every Saturday. There's always traffic because of Nwambe. Nigerians will still go to parties. Nigerians will still club. Nigerians will still enjoy themselves. During December, Nigerians will still throw a lot of celebration. We have the 30th December that is also waiting to absorb a lot of funds within the Nigerian space also. So that simply means that there are opportunities as an entrepreneur. Look at a problem you can solve. Talk to the right people. Get your position paper in front of mentors, talk to people or those that have investment platforms, and you should be able to attract investment. If you're able to sell your idea and pitch it, that should not be a major challenge. As regards positioning Nigeria for export, recently we've had a trade surplus, and currently from the statement from the the special assistance on economy to Nigeria based on the data that's collected from the Nigerian Export Promotion Council. We are likely to have another trade surplus, an increase in the trade surplus for the half year, although the Nigerian Bureau of Statistics have not presented the foreign trade in goods, statistics or foreign trade in goods report. But from what we've seen so far, Nigeria is exporting much more than it is importing. We're having a positive trade balance, but we believe that it can grow significantly much more than this, right? Of the non-Naira export, we are seeing that cocoa is still leading. Urea fertilizer is also contributing significantly. We first need to position that the manufacturing sector, there should be manufacturing incentives. There should be incentives for producing, although we're not saying that incentives that is going to drive other people out of business. Recently, Dangote was advocating that it should be a ban, total ban on importation of those that are refining products. No, that is not. We're not trying to create an unhealthy competition for businesses, but we should allow each business to be able to compete effectively in a market. Then Nigerians will surely want to patronize Nigeria. Despite the fact that Dangote's fuel is currently, or those that are authorized dealers of Dangote are selling above some other market. A lot of people have that trust in that Dangote MRS or Dangote affiliated filling stations, and a lot of people have that confidence. You see that queue. Those that are going to patronize Nigerians are surely going to patronize Nigerians. I'm first a Nigerian. I'll patronize Nigerians, and I will surely continually patronize Nigerians. If I'm able to provide consistent value for it. But one thing we must do is that we, as corporate, we as policy development experts or policy development practitioners, the media, and everyone has a role to play to ensure that we send the right message out or present the right statement to drive the right growth and development in Nigerian economy. Nigeria is a land blessed with a lot of resources. Nigeria is a land blessed with a lot of opportunities. We need to position and put things together to ensure that we're able to achieve or attract the right development that Nigeria needs to be able to do. Is it possible for Nigeria to develop a $1 trillion economy? Yes, it is very, very possible. But if the funds keep going to the financial services or going to banking, which are not the core drivers of a nation economy, then we still really have a lot of things for us to do within that space.
Thank you. Thank you so much, Oluwatosin Oladetan. Thank you so much for that submission. However, let me call your attention to some of the local industries, the local domestic industries that we need to give second attention to that we have not been doing as a country. I think my question also is going to come in two folds. If you look at manufacturing, most especially of vehicles, we have the Nord, we have the Innocent, and we have other local dealers. But it looks like even when the government is making policies to provide a large open playing ground for both domestic and foreigners who are players in that industry, we seem to ask the question, where do we have the policy that will actually give some form of benefit to our local players than the foreigners who come in with the large financial chest to play in the sector, and they come with hard foreign currencies. As a result of that, they seem to defeat our local players in that same industry, and capital flight, like you said, it keeps taking place regularly. Also, Nigeria, or let's say Africa, have the largest trading agreement, free trade zone agreement ever, because of the number of countries in play in the African continental free trade area, about 54 countries. But most of the time we see foreigners coming from the Western climes to also play in this sector, taking advantage of the free trade area agreement that exists among member nations in the continent of Africa, in the sense that these multinationals also delve into the services sector. They establish some of their countries, some of the outlets of their multinational organizations in some different countries, import their goods into these countries and ship them into Nigeria because we have the market. How can the government, through policy, and the African Union, through policy, make sure that we stall that process so that we can have more local domestic industries or local companies participate in the industry in order to attract capital and equity within the system?
So very, 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 very good point and very, very interesting, right? So when we look at the investment in research, they look at the investment in development. When we look at a lot of these our technical institutes, a lot of Nigerian, I've been to some Nigerian technical institutes, and I must tell you, I'm very, very disappointed with the output of the research or with the outputs of what I'm seeing, the facilities in place. Also, yes, not good. An average not car is going to go for around 25 or 30 million. And I'm also seeing a car that is giving me the same benefit at around 10, 18 million. That's giving me exactly the same benefit. That's important. Based on the fact that a lot of Nigerians are still living below the poverty line when we look at their particular income. But when we look at transfer payments, we could say that a lot of Nigerians are living slightly above. We don't have as much poverty as we have in Nigeria as is presented globally. But a lot of Nigerians are quite living below average, or depending on the metrics that we have. So first, before I go out to patronize in Nigeria, I'm first going to look at my boss. If I'm going to get exactly the same service, I'm going to get exactly the same benefit. Of course, people with the law of demand and supply, the lower the price, the higher the quantity demanded. Right. So, and that was something that we see play out in America versus China. If you want to ensure that the prices of China imported goods are significantly high enough that it is American goods are cheaper, so that Americans can be able to patronize Americans. Now, the cost of production, and why will a Nigerian manufacturer place a high price on its goods? When we look at the cost of production in Nigeria, it is reasonably high. So it is not their fault. A lot of these Nigerian manufacturing companies are not delivering as much margins. They are delivering very, very low margins. In fact, the companies that are even delivering high margins are the companies that are exporting, right? Majorly exporting. Yeah, or those that are sending to other markets, which are not being captured in Nigeria. Yes, we have a case that they are having a capture for the Nigerian market, but the cost of production in Nigeria is high. So if the cost of production in Nigeria is high, the higher the price, the higher the quantity supplied, but the higher the price, the lower the quantity demanded, right? So that is something we must look at positionally, right? And also we should also look at the source of origination, like something about we've seen in other climes that just like you rightly mentioned that I have two countries, I can decide to leverage the African Free Continental Trade Agreement to be able to ship between two countries. Meanwhile, the source or the original destination or origin of those goods is not actually from Nigeria. So those are certain things that is going to take after to critically review to ensure that the Nigerians indigenous companies have as much benefit. But it should not also be in a situation whereby foreign companies cannot have a place to play. But if Nigerians appear that Nigerians are cheaper and are not able to get the same quality, I'm able to get the same value, I'm able to get the same benefit. A lot of Nigerians want to associate with the cheaper. They first look at their incomes first, and they will also look at before patriotism. Of course, they want to see that can I really afford this good or can I really afford the services? If I despite the fact that I want to buy Nigeria and the cost of Nigerians is significantly high and it's not affordable for me to be able to purchase, and I can go for something that I can get the same benefit and still maintain the same quality. Of course, an average Nigerian will really want to do that. So we need to is a lot has to be done by the government, a lot has to be done by the investors, a lot has to be done by the private practitioners, the capitalists, and the socialists coming together for us to reposition Nigeria. But Nigeria is a land filled with a lot of opportunities. Nigeria is a land filled with a lot of resources. Nigeria is rightly positioned to drive economic development over the long term. If we get the right things done, Nigeria is a land blessed with a lot of resources. So, and I believe Nigeria is surely going to develop. I also believe Africa is also going to develop. But since the African Free Continental Free Trade Agreement, why another question we ask is why do I need to transact between African countries in a country not denominated or not being managed by an African? Even the CFA that we're trying to use to transact within African countries is being managed by the Bank of France, right? It's managed by the Central Bank of France. So if we've not come together to even agree on a single currency, right, or agree on a regional currency that we can use for an interchange for us to be able to transact our goods or services, I think we're getting there after has been around for quite a number of years, and they're taking some policies. They recently had a reform conference here in Nigeria to be able to drive the right policies in place. And we're going to believe that over time we'll be able to get better and get better. But we are taking the right steps in the right direction. But the steps that we are taking now, it seems like we are crawling or we are walking rather than for us to be running and flying. So it might take for us to see that particular progress or achieve that particular result than expected.
All right, thank you so much, Mr. Oluwatosi. You know, the whole world are looking at Africa. They believe that, yes, Africa is a very good market for their products, for their services. Everyone wants to come to Africa away from the challenges and all that. They believe that, yes, their market will sell here in Africa, in Nigeria, even the entertainment industry. So they are looking at it. But there are so many myths or cliche, however you want to call it, that are flying around the world that you invest in Africa, so is bound to happen or whatsoever. So there are different myths. If you were to meet a foreigner, an investor outside Africa who has been moving around with one of these myths or whatever, what is that myth, that particular one you think you will be able to clear to off the mind of that investor?
Okay, so despite the fact that there might be some things that define Nigerians, or there might be some things that define an average African, or of course we see that a lot of the foreigners, a lot of the Westerners believe that when they look at for example, in Cameroon, we still see a situation whereby someone has been ruling for over 20, 30, 40 years and he still wants to continue to rule. In Uganda, we see someone who is the president, his son is also trying to become the president of the country, right? So we see that we don't have this, and we see this high level of corruption, right? It's majorly predominant within African climates. So one thing investors want is trust, right? If an investor is able to trust you and is able to provide the funds, you're able to provide enough transparency that, okay, this is the way your funds come in, this is what your fund was used for, this is how we spend the funds, and this is how we're able to generate this particular returns. These returns on those funds, this is what is going to be deployed to. So one thing, despite the fact that they might believe that Nigerians or an average African has this entire to corruption or has this niche or has this affiliation to misappropriate funds. Provided is able to have trust in the business that I'm presenting, provided is able to have trust in the dream that I'm presenting, and is able to see very smooth, transparent flow of his funds, whether it is a returns or is making a loss. And I think that is going to increase the confidence. Now, one thing is a lot of these investors or these foreign partners do not want to do is they do not want to associate with the government or the local people because they believe that a lot of corruption, a lot of things that cannot be presented has to come along the way. So if I'm able to instill trust, a lot of people are still money is still going to come to Nigeria, money is still going to come to Africa. Africa is still going to develop, right? Africa has a large vast amount of natural resources. Africa has a large vast of agriculture or mine resources that is going to be exported out of Africa to be able to develop the world. And not just natural resources, not just mineral resources, also human resources. Right, we see a lot of like the Japa syndrome, right? It is not new, it is going to continue to exist, where a lot of people are leaving Africa and they are contributing significantly to the development of those other nations. So why will, despite the fact that someone has left Africa, go to another nation and is able to rise to become the leader or become the head of a parastatal, or become the head of an agency, or become the CEO of a company? The first thing they have to put in place is that those other people, you need to present yourself as someone that can be trusted. And if you can be trusted, you are willing to be able to do business with, you can build a level of collaboration and transparency and you display integrity, then which I think is going to increase the confidence that you're going to have in you to do business with you, whether at the macro level, whether at the micro level, whether at the small or at the medium level. Nigerians are people that investors will always want to go to where their money is safe. Like we've seen playing out in the foreign portfolio investment, investors will always want to also invest in things that they are very sure that they are going to get their money back or get their returns back. Of course, investors are happy to take some losses initially, and if those losses are justifiable. Of course, if we've seen businesses within the first 2, 3 years, they're taking some losses, if they are justifiable and there's transparency, everybody's happy and the whole world is happy for us to be able to do business together. But I have a lot of resources. Africa also have a lot of resources that are exporting aside from manufactured, natural, aside from raw materials, aside from mineral resources. We also export talent resources or human resources to fund or drive the development of these other nations.
All right, thank you very much, Oluwatosin Oladiton. You have been brilliant in your thoughts and submission. Thank you very much for this powerful discussion.
Thank you very much.
Welcome.
Yes.
Quite a robust discussion there.
It is.
And he made mention of one thing, trust. Trust. He kept on saying trust. I remember even on Soup Business Landscape, Doc was saying that some investors, foreign investors, they look at the economy, they look at the government. They say, okay, if I'm going to invest in a particular product or a particular sector, what's going to happen in the next 4 years if a particular administration takes over? Will that policy, the existing policy, will it continue? You know, these are some of the things that these investors look at. This is what builds investors' confidence.
Multinational corporations, they always have their way. And I dare say, even in the continent of Africa, they always have their way. They can lobby their way through by government policy because they actually are found. You see the chief executive officers or some of the emissaries that actually represent the multinational organizations. You find them with government officials, with members of parliament, with senators or government functionaries within the executive arm of government. So they always have their way. The government can embark on a specific economic policy today and give waivers, because most of these organizations we're talking about, you're coming to invest in the country. Sometimes the government give you waivers when you are importing your technology or your equipment into the country because the government is trying to promote production from within and wants Nigerians and the domestic economy to expose to new technologies that will provide a platform for them to learn a new strategy, a new way for developing products that will actually, be made available as import substitution. So most of them, they have their way. However, what the government seems to need to do is to actually strengthen domestic companies, domestic organizations with regards to specific sectors. You are going to, recently Japan is saying it wants to actually increase its FDI or its investment portfolio in the African countries.
Yes.
And specifically, it doesn't need to be told, Nigeria is a very, very big market.
Yes.
If it's going to come into Nigeria, where is it going to? Is it going to come into industries or domestic market where we have majority of persons or organizations playing in that sector that are going to be domestic companies? If there are domestic companies that are if Japan is coming into the market where we have majority of players, domestic market, domestic organizations, then the government will need to make some form of policy where it strengthens the domestic players in that. So if Japan is going to come into a market where most of which you have foreign players in there, then it's easy. They are going to be, the competition in that place is going to be very, very rife because Japan will be there. Let's say China will be there, America will be there, and other advanced economies are going to be there. But the thing is, one thing that the government needs to put into consideration is don't allow only foreign organizations to just completely dominate that market. It's going to be very, very difficult for our domestic and local organizations to actually break into that space. In cases like that, and the government needed to make sure that we have domestic and local players in there too, it has to provide incentive. It has to make sure it extend investment or loan access to credit in that space in a very, very single digit for domestic and local organizations to actually play and participate there. That is why I think that's even one of the reasons why the government is trying to push for the 30%. But you and Chooks and Dog is calling for 100%. It's not just
make more money.
It's not going to be a day job because the domestic and local organizations coming into that space that is being dominated by foreign or multinationals is actually need to play at par or to be more. Do you remember that the output, the product that will be flying in that space is going to be of global standard? And if it's going to be of global standard, we need to have a domestic market or a local company or local company organizations that equally need to produce similar results.
Yes.
And if they are not going to produce similar results, they will be defeated out of that market.
Yes.
So what's the platform that the government is going to make available for local players to come in there and survive? And we should remember that for local players to come in there and survive is not only going to be the benefit of the private organization alone. It's going to be for local, because that will serve as a veritable platform for us to retain capital and to also retain the money, not experiencing capital flight the way we have foreign organizations coming to play in there. That is very, very key. He spoke extensively about agriculture.
Yeah, that's
yes, he wanted to say something about
Yes,
that.
agriculture is something that the Africa continent has to look into, because I feel we are too concerned about the crude. We are too concerned about the gasoline and all that. We are really not putting so much into agriculture. And like he said, so many investors want to come into the agricultural sector. But we also, the government, so to say, has to create that enabling environment. Well, whatever incentive they need to put in place, whatever support they need to give to the domestic farmers or agriculturalists, whatever they need to put in place, we have to put it in place. We are not going to get foreigners to come and farm our lands. We're not going to get, we can definitely get their machineries and all that to come do the job, but we have to do this. We have to put a whole lot into agriculture.
Okay, but
Hunger knows nobody.
Okay.
Does not know a child.
Yes.
Friends will come and go. Hunger will always be there with you. So if we do not invest in agriculture right now, if we still put all our attention and all our concentration in oil and gas, I think we are still behind in that area.
In agriculture,
okay,
you will see that we do not have only local players in there. One would have expected that when you have foreigners coming to play in the agricultural sector, what you expected them to bring is the tractors, the equipment, and the manufacturing,
and the fertilizers,
but the thing is, we have fertilizers, even though they equally still import. The Dangote refinery also, one of the byproducts coming from there, and some other refineries are going to be bringing out fertilizers, so it will be good to retain them. However, China bought some of the companies coming from China bought acres of land in the northern part of the country, and they are farming seriously. And guess what they do when they farm, when they harvest their produce, they don't retain it and sell some, even a quota of it in Nigeria. They export majority, if not 95% of it out of the country. And that's equally against...
I want to say, before those exportations are made, the country is sufficient. Is self-sufficient. You can't export products when your country is not having the one to feed its citizens.
Exporting raw materials.
I'm not talking about. I'm not promoting the activity or the exercise of China or the farms that are established by foreigners to be exporting agricultural produce. I'm just trying to point it out that this is one of the exercises they are involved in, which is very, very wrong, because there are regulations for local content. There are regulations where an organization is allowed to export about 75% of their produce and sell 25% within the country. And if different organizations or different local industries, local companies rather, who are playing in that sector are able to retain 25%, then we should be able to have some level of success. However, because these are foreign organizations too, that they are coming to export and to actually develop the local industry. So apart from that, they are bringing technology, apart from the fact that they are going to be recruiting Nigerians to work in the farm, apart from the fact that they are going to be paying these Nigerians who are actually working in the farm, one of the disadvantages is that they are going to somehow constitute to environmental degradation. And so the government should look at those loopholes to cover it up, because so that it doesn't look like the benefit or the waivers that the government is allowing them because they are foreign investors outweighs the benefit that we are going to get as the recipient of foreign direct investment.
Also, I would also like us to look at, you've always said it, that whatever can be produced locally in Nigeria, we should outrightly ban it or maybe a 50%.
Tax it.
Tax it?
Tariff.
Tariff it?
Tariff
Not ban it.
What can be produced in Nigeria?
Yes, what we produce in the country.
China will not allow you bring in what they are producing there.
True.
So why are we doing that?
That's because we don't have enough of it here. That is the number one reason these things are allowed into the country. It's alarming to say that red oil, palm oil, are imported into Nigeria.
Even Gary.
Even Gary.
Well, we don't have enough of palm oil. We have deficit when it comes to palm oil.
Why?
So we have deficit because there are few investors in that terrain, and you cannot force people to invest. People only invest in, if you're going to tell people to invest, they have to look at how lucrative it is. Palm oil is quite lucrative.
Yes.
However, when you look at it, when you take a time to plant and groom a palm tree, you're looking at a space of between 2 to 5 years or 3 to 5 years. And then you now want to start making industrial use for it, or you want to start, servicing the local industry. And so how do you gain more? If you're going to gain more by exporting out of the country to bring in more dollars, an investor will want to take that advantage and take that route. And that is why the law is in place for 25% being retained back in the country. So palm oil, we have about, we are just doing about 1.4 or maybe about 14 metric tons, 1.4 metric tons of it locally, which is quite insufficient. And we do not even have the required land. We're looking at 3 million acres of land for it to be made available before we can actually meet local demand, which is quite an uphill task. So myself and Chooks, we had this conversation, discussed extensively about it. That's why we're trying to speak to the government if it can promote framework, lay down policy where we have every family trying to have 1 or 2 palm trees around their facility for that specific
in Lagos
purpose.
or outside Lagos?
Well, it might not be in Lagos. It could be somewhere in the southern part of the country, the southeastern part of the country, to promote initiative like that.
Why can't it be Lagos? There are places in Lagos where these things can be planted. Where you're building your house, although in my place it's not advisable.
People don't even have parking space in their house.
That is a factor. But there are still places. There are places around Ikorodu axis that are farmlands, or there are places that are yet to be developed. That the government or the people who owns those places can decide. Okay, let's tap into this. Fashola did something during his tenure, plant a tree. Many people did plant. For those coming from Ikorodu, you see those trees along Uwode, Irawo, those axes. Those trees were planted during the time Fashola said each person should do what? Plant a tree. So I feel that it is not out of place if the government says right now that, okay, each compound should have a palm tree. It is possible. It is achievable. Just break maybe just a section of your compound and plant a tree.
Well, so much quite said here. But it is clear Africa's investment story is being rewritten, but whether it becomes a long-term success will depend on more than just the numbers. Many thanks to our guest, Oluwatosin Oladiton, for your impactful insight. And to our viewers, the question that we leave you with is this: will Africa seize this moment, or probably, if not, let it slip away? I am Olumide Shokoya. This has been Just Africa, where we keep our eyes on the heartbeat of the continent's transformation.
Yes, and I'm Omevi Idolome. Thanks for watching.
I'm Oyin Priya Kromale. Good afternoon to you.